Hi everyone, I hope you're having a good Friday. I thought I would do a quick one on the psychology of putting large positions, large leveraged positions on at key swing points. So I think I talked about previously that monthly and weekly FEGs have been the determining factor with putting in macro lower highs. So a good example of this is the 97K, nearly 98K lower high that was put in on the 15th of January. So we'll go to the monthly quickly, and then we'll go here. Don't like how that's doing that. We'll do it right. Okay, that's a bit better. So, first one, monthly FEG, 50% test, like I was talking about with liquidity, but it's an FEG. Testing the agreed value, and then it rotated, and then getting a lower close again. So we'll go to the weekly. Again, we get support here, and then we get rotation up. Don't pay attention to these levels as well. They are they're representative of price at the moment. Or I may have not changed them at all, actually. But the point that I wanted to make was the 50% of this. So here. So you'd be waiting for a tag of the 50% around this monthly FEG. We'll go to the daily. And then it gets into liquidity, so composite liquidity. The daily closes below it. It tries to tag that monthly FEG, but it can't get into it. Can't get into the 50%. Nearly gets there. So we'll go to the 4 hour. So how I have done this is I set up a 4 hour FEG in here with high volume, and it aligns perfectly with the middle of the monthly FEG. And then I also put stacked liquidity in here as well. So I use that as a gauge, more of like a area to catch price. You're wanting to catch price around this area and then see what it does. So if I can get there, we'll put the replay on. So we're divergent. We're already divergent at this point, and strength is rolling. So it would probably be indicative of price starting to move back. We'll go to the 4 hour quickly, and we have a bear div as well. So really that would be the indication for me that there is more likely a reversal that's going to come. We can go to the daily as well, and then we also get a pivot, and then we don't get a bear div, but it's definitely pushing the 70% on RSI. We'll go to the 12 hour quickly. It's going to load. So we still get weakness there. So the RSI is lower than the pivot here for strength. So more likely rotation back down. That being said, the 8 hour is not as conclusive, but the 4 hour with a double bear, and especially having this pivot higher than here, probably more an indication of rotation back down, or mean rotation back to the mean at least, which is what I would be looking for. So we'll go to the 1 hour. We get that consistent downtrend with RSI. And then pretty much you get a swing of this here. And then that's what you'll be wanting to look at. We'll go to the 5 minute quickly. So it's not very conclusive, which is the thing. So as I've stated previously, it's more you're wanting to see a very close tag of the 50%, either of liquidity or of an FVG for an agreed value and then rotation to the opposite side. And this seems to be the test candle at 10 past 6 in the morning, UTC plus 10. So it literally just swung this point, and then these still close below it. This closed below it, this closed below it. So there's inherent weakness there. So this would be a area in which you would be wanting price to test for an agreed value and then rotate back down. So what could we say for this? So with an invalidation point, I would put it at just above the 50%. So you put it at, say, 0.5. I'll give myself that buffer for the swing. Or you could get on it at this point when it comes back down. There you go. You have the high volume 1 minute pushing through the level. That's what I would want to see for a test of this area, and then I'll get in on that. So let's say you had a 20K trading account for perps. So ideally you could use 25x leverage. So the strategy we'll get out of this, and we'll go to the daily. So the strategy would be to put 10K in at the top for an invalidation, because you would be in it, I think with BingX, if you're on a standard account, it is 0.01% of the position size. So it would be $125 each way to buy in and then to get out for the invalidation, plus the percentage for the stop loss as well. So it's not a huge amount for a potential entry that can run you a long way if it's a potential lower high. So we go 38%. So my thinking is on this, you could go, you could put 250K in around here for the, and then wait for the invalidation, and then you can put the, if you need to, put the rest of the 10K in for margin or some of it, and then but my thinking is the invalidation would be this point. So obviously if the stop is hit, then you would reassess, but it justifies putting in a large position size. My thinking is using 25x leverage on a 20K account. So you put 10K in initial, so that's a 250K position size, and then you wait for the breach goes through, you take the entry, and then you can take another entry on this for an additional 250K, and then you get the rotation back down. Obviously, like things are not set in stone. It's not 100% guaranteed, but the reality is, based upon my experience now, I can say that it is worth taking a loss for a small invalidation versus, so an invalidation of 0.5% versus a full trade of nearly 39%. So let's just do the math quickly. So if we actually put the whole 500K position on, so a 20K position at 25x, so 500K, so you times that by 0.3891, so 38.91%, you would get 194.5K from that move. So versus what would be the invalidation. So the initial invalidation would be 250K times, what would it be? 0.5, I think was the initial stop loss position. Oh, sorry. That's not it. Times 0.00. So that'd be 10, that'd be 1, that'd be 0.5. 10, 1, 0.5, okay. I don't think that is correct. Times 0.10, 1, 5. So you'd be at $1,250 for that 0.5% stop loss. But the reality, and then you'd plus the in and out, so it'd be another $250 on top of that. So you'd be at $1,500. But you could say you'd be at $1,500 and you can still put more capital in, versus losing out on a trade where you're making 194K over 23 days. Like it justifies the position. And this is my thinking of it with trading philosophy and understanding risk and managing it. So you can always make more money, but you can't buy more time. So you're not going to blow your account by being down 1,500 on a very high probable trade entry if it's invalidated. But if it works and it runs in your favor and you manage it correctly on a 20K account, you could be up 194K. I forget what the liquidation point would be for 25K. I think it's like 3.5 or 4% price movement for full liquidation. So it's not, you've still got headroom there. But Obviously you want to have an invalidation point that's close and not run it that much. So that was one area that I was wanting to go over. Let's say the low here as well with high volume. So I did mark this in initially, but I didn't take the position in, in early February, which I was very annoyed with myself because I did see it coming through, and it did come through here. So I did mark out, like I've marked out here, we have daily liquidity for its entirety through this orange band, orange box with the center line here. And then we have 4-hour liquidity through here to here. And then we have another 4-hour liquidity here to here. Sorry, here to here with overlapping boxes. So you would want price to be trapped around this area. We'll go back here. So I think, where is RSI there? Okay, there it is. So it's on the 4-hour, that's on the 1-hour. So very aggressive buying in the bottom where 50% liquidity is tested. And then you can see the rotation with RSI slowly building. Same with here. And then we go to the 5-minute. So 5 minutes interesting. This is what I saw it at as, I think there's 3 candles. So you get closes above the 50% of the 4-hour liquidity. Like I said, high volume, touch of the 50%, but you get closes above. That's the key indication. So this was the interesting one because you get high volume down, you don't get 50% touch, and then you get people buying up, and then you get suppression of price going down, and then it touches 50% and reverses. So I want to touch on that as well. So that would be the invalidate. So where are we? It's going to show me or not. Oh, there we go. So I'll bring it back here as well. So this was the scary one, and I have a lot more confidence in my strategy now and understanding, and it's much more mechanical. It's always a 50% touch. You want closes above the 50%, but you want a touch of the 50% of the liquidity for an acceptance of price reversal. If people are protecting that, they test it and protect it, there is high probability of reversal. So let's say let's say you're wanting a touch of the 50% of the 4-hour. So you could say your invalidation point is either the daily liquidity or even the next 4-hour liquidity. I would probably put it just below the daily liquidity at 0.75%. That's where I would put it. You would also have to look at order flow in here. The reality is, if you put a trade on here, because it's extremely high probability, you can run it very aggressively. Like I was saying previously, like if you get, where are we? Is it going to show me it? There we are. And the other consideration is how aggressive the sell-off was in 23 days. So nearly 40% in 23 days. You would want a reversal quite around this area, because because you have support at, let's say 58K, 59K. We'll go the weekly. So weekly support is down at 54K. Otherwise, you have 62K. So I would be looking at the monthly or the daily. We'll see what the daily has on offer. If they've got support there as well. Yes, they do. So it would be testing of support at around 60K, 60.3K. Otherwise, you go lower, and that would be 58K. So you would want all that liquidity to be supported. Otherwise, you're moving much further down. So we'll go back to here. Now, as I was stating, so you'd have a strong invalidation point, and you have the thesis would be this area, this capture zone, would be defended very strongly. So you'd probably go into it, as I said, with a 20K account on 25X. You would put 10K in for a 250K initial position size. You can use the rest of the remaining 10K as potential margin if you think that the 50% of daily liquidity is going to get tested as well. And then put the remainder in for the remaining position size to boost it. So let's say we go from 50% of the 4-hour liquidity up to the, I think that's developing yearly, if I remember. Yeah, we'll bring that back down. Developing monthly, sorry. And then you'd want a tag of that. So let's say you get like around 19%. So 500K, let's say, that would be the maximum you'd want. It may be less, but 0.1925. So you're getting 96K in 12 hours, but it justifies the position. Alternatively, you could say that if it hits your stop loss, you would be out. So for that, times, I put it at 0.75. So that's 10%, 1%, 75. So you'd be out 3,700, 3,750 plus 5%. Sorry, $500. So $250 either way. So you'd be down 42.50. But the reality is that the alternative, the upside is 96K, nearly 97K US. So my thinking is it justifies having a position in here. I would probably put it as 250K, so 10K position, and then just work it from there. But the key swing points. What else can I talk about? Oh, this swing failure pattern as well on the new month. So new months are very interesting. So we have new month here, we get massive reversal. We have new month here, and then we get the tag of the, this is the weekly FEG that I was talking about at 82K. So it tested, this is what I was waiting for as well. As I stated previously, the monthly was the target for 98K. The weekly FEG was the target for the 82K. We'll go to the 1 hour. So I believe it was like 9:30 on Brisbane time, 9:30 p.m. So it was on London. And we'll go to the 5 minutes. There we go. So you've got the higher volume coming into the 50% level of the FEG, and then you get reversal with suppression of price with the wicks. So that's what I would be looking at. That would be my entry confirmation. So you could either, alternatively, wait for price to come back down and wait, which it did. So you could say this would be your entry. What would be your invalidation? Say 0.5%. Give yourself an overhead of 0.5%. So you got a lot of headroom with that. But we'll get out of that. And then, so that's a key swing point as well. The problem is it came up to test it as well and put in a bear div on the daily. And I think that was the Monday. Yes, it was the Monday that it tested it. Came up and tested. Monday morning, new session, new week. Let's say you put it on here on the 50%. And then you ran it, hang on. And then you ran it back down into the target daily liquidity, which it did run into, and it hit that, like I said previously, it hit the 4-hour liquidity as well below it with high volume. So that would be the capture area. So, whoops. So put it on the 50% if I can get it. Oh. Put it on the 50% if I can get it. And then run it down to about, I'd say the daily FEG, daily liquidity, the 50%. So say 28%, 27.9%. So even if you're at 10K at 25x, and then you do that, and then you do 0.279, you'd be up nearly 70K. So it justifies the position. Obviously, you can double that. You'd be up nearly 140K if you had a 500,000 position on it. But as I stated previously, if you have correct risk management and if you have a small invalidation point which justifies putting a position on, and you think it's a key swing point, then it makes sense to put it on. Obviously, there are times where you have to be sensible, and it may not be, but the point is repetition, and then you get the instinct, you get a gut feeling, you understand patterns from previous price movements, you understand where the capture zones are, where the liquidity is, where support is, and then you understand how price normally moves in a new month, and then looking for other factors as well, combining all that, and then just waiting. I mean, another example is this. You have a swing failure pattern. You get lower closes on the daily, but you get very aggressive buying coming into the new month. So we'll do that as well quickly. So you get the SFP on the new session. waiting for that capture zone. I think I talked about this before as well. So this 0.618 was the reverse of the last bear market bottom at 15K to the top at 126K. And then I reversed it. So I think the 0% is at 126K, and then the 100% is at 15K. Yeah. And then you get the target zones of the 0.618 and the 0.66. So it ran into that 0.618 very aggressively and hard and stopped and then reversed, swung this point and then went above. So what was I gonna, so the two thoughts that I had were either it's going to swing this. I didn't have this in at the time, the 0.618, I hadn't reversed the macro. So I was thinking it was going to get support off this cascade low potentially, and then run it up, or it was going straight to the monthly liquidity, the 50% of monthly liquidity, which was the concern that I had. And there's a lot of, like, there's 3K difference nearly between the two. So that was my fear. But we'll go to the 5% just quickly. Sorry, 5 minute, just quickly. And then we'll put the replay on. Okay. All right, so the good news is that obviously it swung it and then moved back up. And I think it was just aggressive liquidations and then aggressive buying in the bottom. So you go 5 minute and you think that's a liquidation candle, but the reality is it's a buying candle, and you still get closes above that cascade low, that swing point. So that's really the factor that I would be looking for, and you would want to have that as the entry point if it's a swing failure pattern. So how far below did we go? 0.5, 0.52. So you could go here to here, and that would be your invalidation point at 50%, or you go the 1 minute, which would give you the strongest indication, and then you have it there and there, much lower and very close to the 0.618, pretty much on it. I think I stated this as well with the 30-second too. So it just it touched that 0.618 and then reversed. So crazy how accurate that was, but that'd be what I would be looking for. Once it crossed that, I would go down the 30-second chart and then wait for a price to move. So you get the initial sell-off, you get the touch and the agreement at the 0.618, and then the reversal. So it depends how you'd want to trade it at that time, but looking back at it in hindsight, even just taking a position here and having this 50% as the invalidation point or just below would justify the position, especially at 250K. And then you can add to the position around the cascade low point if it's an SFP. But yeah, I hope this helps. It's nothing crazy. But they're the lessons that I've learned. There are points in which you want to fully commit to a position. you want to give yourself 50% of your trading capital to use as margin. So commit to the position initially, have this very strong and very close invalidation point. And then after it has confirmed what you think it's going to do, then add to that position with however much remaining capital you have if you want to fully commit to the position. So yeah, that's my thinking on it. I have learned a lot this year regarding psychology based on large swing positions and justifying that aggressive position sizes, because the risks are significantly outweighed by the rewards. And you could scale the position that you have initially, and then, so let's say you go from 20K to 100K account. I mean, you could justifiably say that you could do 10x on a 100K account if you have the correct risk management. So you put 50K in initial, so you're at 500K. And then obviously you do the same strategy, and then once it moves in the direction that you think and it doesn't touch your invalidation point, then you can put the remaining 50K in. So you have a $1 million position on perps, and then you're really making decent money. Something to consider anyway. But yeah, that's my thinking on it. That's the philosophy of scaling trades at key levels, key swing levels, and yeah, they're the lessons that I've learned this year. Not necessarily wishing, but understanding that I should have been more aggressive and trusted my strategies, trusted my analysis, and fully committed to the position. So anyway, that's pretty much it for me at the moment. My throat is quite sore, so I will sign off for today. But I hope this helps, and I will see you in the next one.